The Bitcoin ETF world is buzzing with three major developments that could have a profound impact on the future of cryptocurrency investment. Let's start with a quick refresher. ETFs, or exchange-traded funds, are a type of investment fund and exchange-traded product that holds assets like stocks, bonds, or commodities, and in this case, Bitcoin. They're traded on traditional stock exchanges, making them a potential game-changer for bringing cryptocurrencies into the mainstream. Now onto the big news. Firstly, we have allegations suggesting BlackRock, a global investment giant, is driving down Bitcoin prices in anticipation of a spot Bitcoin ETF approval. Secondly, the Securities and Exchange Commission, or the SEC, is playing a delay game, pushing back decisions on spot Bitcoin ETFs for all applicants. Lastly, we're seeing a flurry of new Bitcoin ETF applications, with a range of companies vying for approval. Let's delve into the first announcement and what it might mean for the Bitcoin world. BlackRock, the world's largest asset manager, has been accused of deliberately driving down Bitcoin prices in anticipation of spot BTC ETF approval. A recent report from FXS Street has brought this controversial claim to light. According to the report, BlackRock, with its vast financial influence, might be manipulating the Bitcoin market. But why would they do this, you might wonder? Well, the reasoning is simple and strategic. If the price of Bitcoin drops, and then a spot BTC ETF is approved, BlackRock stands to gain massively. This is because they could potentially buy Bitcoin at a lower price before the ETF approval, and then benefit from the subsequent price surge that would likely follow the approval. Of course, this is all speculative at the moment, and it's important to remember that these are just suspicions. Only time will tell if these suspicions are correct, and what impact this could have on the Bitcoin market. In another significant development, the SEC has delayed its decision on spot Bitcoin ETF applications from multiple applicants, including BlackRock and Fidelity. This news, recently reported by CoinDesk, has sent ripples through the crypto market. Now you might be wondering, why the delay? Well, the SEC's reasons remain as murky as the deep ocean. Some speculate it's a cautious approach given the volatile nature of cryptocurrencies. Others suggest that the SEC might be meticulously examining the market manipulation risks associated with Bitcoin ETFs. Whatever the reasons, this delay has profound implications. For the applicants, it's a frustrating waiting game. It's like preparing for a marathon, only to find out the race day has been postponed indefinitely. And for the wider Bitcoin market, it's a suspenseful period of uncertainty. The approval of a Bitcoin ETF could potentially open floodgates to mainstream investors, driving up demand and prices. This delay leaves the Bitcoin ETF world in suspense, waiting for the SEC's final decision. The Bitcoin ETF race is heating up, with several key players filing applications and anxiously awaiting the SEC's decision. According to a recent report from Cointelegraph, there's a flurry of activity in the Bitcoin ETF space. Numerous companies are throwing their hats into the ring, hoping to become the first to offer a spot Bitcoin ETF in the United States. The potential implications of these applications are substantial. For the applicants themselves, approval could mean a significant boost in their business. For the wider Bitcoin market, it could mean increased legitimacy and potentially a surge in value. But it's not just about the potential winners. The SEC's decision will also have a significant impact on the losers. Those whose applications are denied may have to rethink their strategies, potentially leading to a shakeup in the market. With the SEC's decision looming, the Bitcoin ETF market is a space to watch closely. These three developments are shaking up the Bitcoin ETF world, with potential implications for investors, applicants, and the wider Bitcoin market. So let's take a quick recap. We've seen how BlackRock's anticipation is influencing the Bitcoin price, with analysts pointing to a deliberate drive down in anticipation for spot BTC ETF approval. Then we learned about the SEC's decision to delay the spot Bitcoin ETF for all applicants, including BlackRock and Fidelity. This move has certainly added a new twist to the narrative. And lastly, we delved into the various players filing for Bitcoin ETF applications, and the looming SEC decision that could change the game. As we navigate these exciting and unpredictable times, it's crucial to stay informed. Keep tabs on these developments and others that are sure to surface in the dynamic world of Bitcoin ETFs. As the Bitcoin ETF saga continues to unfold, one thing is clear: the future of Bitcoin investment is anything but predictable. Before we close out this video, we'd like to extend an invitation to become a part of our Internet Money Matrix community. If you found this video informative and valuable in keeping up to date with the latest developments in the Bitcoin ETF saga, do us a favor and hit that like button. Your interaction helps us understand what content you find most useful and helps us shape our future videos. Furthermore, if you're not already subscribed to our channel, we encourage you to do so. At Internet Money Matrix, we strive to deliver the most current finance and macroeconomic news. By subscribing, you'll be the first to receive our latest updates and insights on the finance world's most pressing issues and trends. In the dynamic and fast-paced world of finance, staying informed is key. So join us on this journey and become a part of our growing community. Click on that subscribe button and don't forget to hit the bell icon to get notified whenever we post a new video. Stay tuned to Internet Money Matrix for the latest buzz in the finance world.